Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. Today is Tuesday, September 20th. We've got three markets for you today. Before we get into the markets and charts, would like to invite you, if you have not already, to subscribe to our YouTube channels. We continue to try to grow our following. If you already follow us, we do appreciate it. If you haven't, look us up in the YouTube search bar, Blue Line Futures, and hit that subscribe button. We'd greatly appreciate it. Now that we got that out of the way, we can get into the charts. The first market of interest here today is wheat. Wheat really stole the headlines in the agricultural space as we got a big rally here early this morning. Right before that early morning intermission, we saw the market start to rally, and it really didn't let up throughout today's trade. I think we're up in the mid 60 cents towards the end of the day, just shy of that daily limit, 70 cents. And this is a nice technical move as well. But the fundamental reason was the Russia announced a referendum plan to vote on whether some regions of Ukraine would become a part of Russia. And that obviously got traders and market participants a little bit nervous that there might be more sanctions to come, which could make exporting grain a little bit more difficult in the Black Sea region. So we got the big move higher. Potentially, we see that carry over into some more upward momentum, especially on the technical front, with little resistance until you get back towards these highs here, going back to, what was that, July and June. That comes in closer to about 950. Before that, there are a few hurdles. You've got the 200-day moving average there, noted by the yellow line at 914, and above that, the 100-day moving average at 942 and an eighth. So I think 942, 950 is going to be the resistance pocket if we can get some follow through. If you look all the way back here to March, you can see that that's kind of been a bit of an inflection point for the market. Previous resistance became support, breakdown point, and previous support now becomes resistance, and potentially we get back up there again. We've noted this multiple times here over the last several months, this consolidation that we've been in, starting to form a little bit of an inverse head and shoulders, and today you get a fundamental catalyst to give us a technical breakout move to the upside. Obviously, we need to see some follow-through for confirmation, but the chart still looks relatively constructive, despite where wheat prices are on the global market. So the chart looks good. We'll see if there can be any follow-through throughout the rest of the week or not. Time will tell. But again, next major resistance point comes in, I would say, 940 to 950, give or take. Now, corn was obviously a beneficiary of this, but honestly, if I was bullish corn and saw wheat up 60, I would be a little bit disappointed that corn was only up 13 cents. I think some of the relief maybe came on some technical support as well. We tested and held 100-day moving average the last two sessions. Also, that coincided with trend line support here from these lows back in July. Now we're rallying back towards the top end of the range, which comes in a little bit closer towards that psychologically and technically significant $7 handle. This time of year, when harvest starts to pick up a little bit, I like leaning on the sell side, but you've got to be aware of this. If we have a technical breakout above the top end of this recent range and that $7 mark, it could potentially spur a retest of this gap, or a fill of this gap all the way back from June 21st, and that comes in closer to 730. So breakout above $7 certainly opens the door for technical buying towards that gap. Again, June 21st comes in a little bit closer towards that 730 level, so that's going to be something to keep a very close eye on. Also, wheat. If wheat gives it back, if the Western countries kind of shrug off Russia's referendum idea, potentially that pressures wheat and corn comes back off. So a lot of moving parts here as we approach the midway point of the trading week, which I also should mention tomorrow we have the Federal Reserve meeting as well, where the Federal Reserve is expected to raise rates by 75 basis points, but a full point has not been ruled out yet. And if they do go ahead and rip the Band-Aid off and raise a full point, I wouldn't be surprised to see that lead to a initial knee-jerk reaction lower in a lot of these markets, including the equities, which I think would probably spill over into commodities. And with that said, that takes us into our last and final market, live cattle. Live cattle have been absolutely resilient. The stock market's been on very shaky ground here over the last several months, but live cattle continues to linger near the upper end of the range. We were trading at our highest levels since basically making contract highs back in April earlier today, but weren't able to sustain that momentum and kind of peeled off into the close. But still, all in all, this market has been impressive, especially with the cash market really just being a stick in the mud as well. We would have thought that the cash market being stuck near 142, 143, and the outside markets on uneasy footing, that we would probably come back here towards at least the 50-day moving average near 149 and change. But we're still lingering up here. Still like leaning on the short side so long as we can defend these April highs. But I'm impressed. I'm a bearish live cattle guy who is impressed with the resilience of this market as of late. So those are some of the things we're looking at. That's what you should be looking at too. It's been Oliver Sloup, Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.